I'm your host. I'm Kresina. Just a little bit about myself. I'm also passionate about personal finance and investing, and also on my own journey to financial independence. And I'm also head of product and community at Hurler. So I'm excited to kick off this event and have all of you here, especially at the end of the year. It's great to see people in person and have people online joining us. So tonight we'll be discussing some of the most commonly asked questions around investing. We'll be joined by a panel of investors and our industry experts as well, who are going to share some tips and tricks on how to learn about making the best financial choices and building wealth. None of this is a get-rich-quick scheme. We all know it's a slow process to build wealth, and that's why we're all in this together, the Get-Rich-Slow Club. So just some housekeeping rules. Toilets are just over to the side. Help yourself to some food and drinks. And we'll have a 3-panel discussion. So this will be the first one for about 15 minutes, and the second one we'll have a break in between, and then a third one we'll have the investors back up for questions from the audience as well. So before we get started, just want to say this event is for information purposes only. None of the information discussed is financial advice, and any opinions or commentary is the view of the speaker, not of this event. And this event doesn't replace any professional advice, so please talk to someone if you're making financial decisions. With all that, I think let's kick it off. Let's talk about money and finance. So I want to introduce the panelists that we have here today. We've got Queenie from Invest with Queenie, who's a personal finance content creator. You may have seen her amazing content on YouTube and whatnot. We've got Jody from Invest, who looks after investor relations for Invest, and works with direct investors like all of you here today. She's also the mystery woman behind the Instagram account for Invest. That's who it is. And E-Invest specializes in creating active ETFs for segments of the market where active management makes sense. We have Kanish Chung from ETF Securities, who is head of distribution. Kanish works in investing management for over a decade and has helped grow ETF Securities into being one of the most innovative ETF providers in Australia. And last but not least, we've got Alex from Broke Girl Wealth, who is a corporate lawyer and a new puppy mom, and also creates fantastic financial literacy content as well on Broke Girl Wealth. So thank you for all of you here today. So we're excited to kick things off. Some of the most frequently asked questions around investing is often around low-cost index funds. We hear that quite a bit. Warren Buffett suggests investing in low-cost index funds. So let's unpack that a bit. Kanish, do you want to start off by telling us what are index funds, and are they the same thing as ETFs?
Yeah, so look, for a lot of people, index funds or passive investing started with Vanguard back in the 60s, 70s. And the idea was, how do I track the market? How do I track my portfolio against what the market is doing? And that's how passive investing essentially started. The first index actually was launched in the late 1800s, and that was from Dow Jones. So you've got this idea of passive investing, which now we all relate to at the moment is just market tracking. So whenever you go on to, say, Channel 9 or Channel 10, you see the finance news bulletin, you see Koshi talking about, Sunrise going, so what the market's doing. Everyone's going about ASX 200, the FTSE, S&P 500. That is the market, and that is where passive investing started. Now, we track forward and we talk about ETFs. Now, essentially, ETFs are an evolution of passive investing. So if traditionally I could go, I just want to invest in the market. So that is what passive investing starts with. But what happens if the underlying benchmark of the ETF, that the benchmark you're tracking, how does that develop? So if it goes beyond the market, can it go to, say, a different asset class like physical gold? Can it go to a crypto, say Bitcoin? Or can it go to a fixed income? Can it go to a thematic? Can it go to a sector? So that is where we're now at in terms of the ETF world from a passive side. So traditional passive investing was simply the market, but now you talk about the idea of indexing, and it's all about evolution. So from where we were 150 years ago, that is what indexing was. Where we are now in terms of what ETFs have given us, it is different solutions for investors to essentially build a portfolio. That is all it is. And at ETF Securities, as an ETF provider, we were talking with clients earlier, What's our sort of goal? Our goal is simply to say we're going to give vehicles for investors to build a portfolio. We have a physical gold ETF. We have an ETF that goes on battery technology, AC/DC. We have an ETF that looks at yield for US equities, ZYUS, or whatever it may be. Or we may do crypto. But we may, for an investor, it's about their ability to choose and build a portfolio. And that's how passive ETFs have developed.
Thanks for that. That's fantastic. And I know that ETFs are quite different. There's different types of ETFs. Jody, can you talk a little bit about that as well?
Yeah, sure. ETF stands, most people probably know this already, but it stands for Exchange Traded Fund, and essentially it's a whole portfolio that you can buy on the exchange, just like you would buy a single share. And what's really great, and what you've kind of uncovered already, is that you can split up ETFs into all different segments. So you can have specific ones focused on asset classes, like what we do with our fixed income ETFs, but you can also focus on things like market cap, so focusing on just on smaller companies versus really large companies, thematics, which you've covered as well. There's lots of ways to slice and dice it, but there's another really important evolution to what you said, which is going beyond what passive investing is, so tracking an index and I guess a rules-based approach. There's now, as of only a couple of years ago, there's now active ETFs, which are, instead of following a rule or following an index, you have a team of professional investment managers who pick and choose what goes in that portfolio. And that's what we do at eInvest. And only in areas, again, what I mentioned earlier, only in areas where kind of active management really makes sense. But yeah, active versus passive, it's a really interesting debate. And
we could probably have a
oh my God, we could go for hours.
Exactly.
So I'm holding back here. But I think that there's a real opportunity to partner active and passive funds together. And there's some cases where we really make a strong argument that active is really cool.
But and that's the other thing. So for a lot of investors, they may say, look, my personal experience, I come from the active side. So I've come from active management, so I know both the active and passive well. You will find that there are arguments for and against active and passive. You will also find fund managers that are very much beneficial from an active sense to say, do you know what? I believe in that portfolio manager and I think that they will outperform the benchmark, and therefore that is the right thing to do. And there is also segments of the market where active management does work over passive management. Now, you may take into account fees, you may take into account a lot of different factors. So it's all about complementing each other. It's not about one versus the other. It's about complementing and building a portfolio together between the different options that you have available to you.
It's like that meme, like, why not both? I love that.
Why not both? Why not all?
Yes.
There's so many ETFs to choose from. Queenie, when you choose ETFs for yourself, what is some of the research that you do, or something that you have to take into consideration?
Okay, so can everyone hear me? I hope it's like all loud and clear. But there are so many different websites, and I think it can be really overwhelming to see, like, there are so many different ETFs out there in the market, and in a way it's like such a good thing, because it's like, oh, it's amazing, like you can pick anything, you can invest in anything, but it can also be really overwhelming. Like, they've done these studies where, people have they've chosen out of 3 jars of jam, and they feel more satisfied being able to pick out of only 3 jars of jam rather than 50, and I think that's kind of how we feel like being investors in this time. It's amazing, but then it's also challenging. So one of the resources that I really like is called Market Index, and it has every single ASX ETF listed there, and it actually divides it up between different things that you're looking for. So we're not all the same, we're not all investing in the same things, we don't all want the same things, we don't have the same goals, so you can actually have a look on that website. Maybe you're interested in more dividend ETFs, you can click on that. Maybe you're more interested in high growth ETFs, then you can click on that and have a look and compare different ETFs, different management fees. And yeah, that's personally how I like to look at ETFs. And I guess now personally I do like to have more of an ESG focus, because I do want to make sure that the money that I'm putting into the world is actually going to make a positive impact on this world. And I just want to feel good about the things that I'm investing in. And I don't think that you need to make a trade-off between like making a positive impact and then also making money at the same time. Like you absolutely can have both. So yeah, that's what I like to do. Does anyone have any like other resources that you guys like to invest in or?
I know that Mark's here today. I'm not sure where he is. There he
There
is.
he is over there.
ETF Tracker. I love Mark's website, ETF Tracker.
I didn't pay you for that.
No, you didn't.
Not sponsored.
But like, what I often get is people go like, well, how do I know even what's in an ETF? And you know, something that I always say is look under the hood, understand what's actually in there, especially when it comes to ESG or environmental, social and governance investing, like ethical investing, because everyone's kind of benchmark of what they feel is sustainable and what they're cool with is kind of different. And there's a lot of greenwashing out there, so looking under the hood is really important. And what I love about ETF Tracker is that you can drill down into the individual companies or holdings that sit in an ETF. And so you can really get a better idea of what's on there and actually even make comparisons. So go Mark.
I'd probably like to point out, so again, a bit of a plug for ETF Securities, but we do 2 content pieces. Again, I know.
Are you from ETF Securities?
It was something that we started about 5-6 years ago, and it was a bit, a controversial topic internally, but we actually did what we call it the ETF Weekly Monitor. So it's out every Tuesday. It is a profile on the ETF market. It is sent out every Tuesday morning about 11 o'clock, and it actually gives you a profile on the ETF market. It gives you the top performers, the worst performers by performance. It goes by flows. So what are the top ETFs that have attracted flows, the inflows, the outflows? It goes volumes. And I think for that, we have been very much a case of we are not going to be an ETF provider of everything, but we're happy to do things like that. So the weekly monitor, and we also do an ETF landscape. So it's a booklet that actually profiles active and passive ETFs. So we profile every single provider's ETFs, and we do it on a semi-annual basis. It's a booklet that we produce. Again, it's weird that an ETF provider that only has 18, 20 products, but we're basically saying this is what everyone's products are. But to your point, it is giving people the understanding of what are you investing in. Lifting up the bonnet. You could have 5 European equity ETFs, 4 of which only invest in Europe, 1 invests in UK. Of the European equity ETFs, 1's hedged, 3 are unhedged, 2 have broad Europe, non-UK, 1 has UK and Europe, but 1 all different fees. Again, if I was to say to any investor, do you know all those codes? Do you know the understanding? I know it because I'm in the industry, but it's hard because you may not know that. So a booklet, easy to digest in that respect.
The message is do your research, obviously,
100%.
as you've heard here. But nonetheless, people often ask, what ETF should I invest in? Alex, do you have any feedback on people who ask that? I'm sure you get it asked all the time. What ETF should I invest in?
Say? Yes, someone's listening, exactly. I mean, that's kind of like saying, Anna, what's your favorite color? And you say orange, and I go, well, I like blue. And so I'm not going to buy an orange ETF because Anna likes orange. Our investing goals are different. Our timeline is different. Anna has kids, Anna has a house. Like the things that we're investing for are different. But when I say, what ETFs do you invest in? The first question has to be, do you understand why you're picking an ETF? Are you picking an ETF because that's the buzzword? I love you guys, but it is. It's like everyone's favorite term. And there are pros. There are some serious pros to ETFs and index funds broadly. But your first step as an investor is like, why am I investing in this? What's the value to me? Is it diversification? Is it a particular slice of the industry? Is that be it crypto or hybrids, whatever the case may be? And then once you figure those kind of questions out, and then I sort of ask myself, what am I investing for? Well, maybe I want my core portfolio to kind of just be steady, nice and steady, make me money, make a bit of dividends, have a nice solid return, be a little bit diversified so that the market ups and downs, because that's normal, it's going to happen. I'm a little bit buffered by that. And I don't feel those, I'm not sitting in 100% crypto and I feel every day as if it was the last day of my life. Oh my God, that's my house deposit. It's worth 10 cents. So you kind of think about those things and all of those questions. It's not what ETF do I choose, because there's no perfect, I'm going to tell you today, there is no perfect portfolio. The reason Jody and Kanesh and I and all of us have different portfolios and will probably have varying levels of success, but success nonetheless, is because there's no like perfect one, because the whole financial services market would be out of a job if there was a perfect portfolio. So the thing is, ask yourself those questions, do your research. I promise it's fun. It can be really fun, especially when you're like, this is what I really love to invest in, and then pick those products that suit you. And then it's evolving, you know, what you picked when you first started doesn't have to be where you are in 15 years, because your needs, your goals, how old you are, all those things change.
Yeah, absolutely. They change in time. I've got a last question. Is around what other things should be considered? I know we talked a little bit about your goals, but what are other things that you need to consider when you're investing? Kind of open to anyone who wants to take it.
Values is what stands out to me. Like, it's really interesting because people go, oh, ethical investing is so amazing and big. And I'm like, well, actually, like, whose ethics is it anyway? Because like what you might find ethical, you might not. And it's a very nuanced space. And so I really think it's like, you know, digging deep and think, how far do I want to go with this? And really look under the hood of the ethical ETFs that you're investing in, because as I mentioned earlier, there is a lot of like kind of box ticking and greenwashing, which is why you know, we look at active management in ethical investing, because I think you need real people looking at this stuff and hopefully, like, I don't want to use swear words, but sifting through all the rubbish and finding the gems. It's really nuanced stuff. So, and it's personal.
Yeah. Some other things to consider: risk, diversification. Does anyone want to comment on any of the, or you were going to say something else?
I was going to say something, but I was just going to say that I think it's also important to like realize that investing, it's not just like a quick, it's not a get rich quick scheme, you know, like really like it's a long term journey. And I think that it can be really easy to like get into that mindset of like, oh my gosh, like it must be so easy to make 100, 200% returns every year. You know, you see it all the time on social media and news articles. Someone just became a Dogecoin millionaire. Oh my God, if I invested $1 in Dogecoin, I would be a millionaire. You know, it's so easy to think like that.
But there's no squid coin, lost my house deposit.
Oh, exactly.
Yeah.
It's crazy. It's kind of like, but it's a long-term journey, you know? It's like, there is no get-rich-quick scheme. It's a long-term journey, and as long as you're playing the long-term game, like you're comfortable with what you're holding for like, you know, the next few years, like I think that's where I feel most comfortable anyway, you know? Yeah.
I think I'd probably add to that, which is from an ETF perspective, of the total market that currently exists in the ETF world, there's probably about 240, 245 ETFs. Less than 5% of ETFs that are currently listed are trading tools. So by trading tools, I'm talking about the leverage products, by currency products, where you are taking a very short-term view on what you want that underlying exposure to, you know, you're taking essentially an investment on that underlying exposure, where it's like, you know, we've got a leveraged NASDAQ product. Now, that is a short-term trading tool. It is not a long-term tool, because that will, over time, it may do worse or better than what the underlying NASDAQ will, as an index, do. But most of the ETFs out there, so more than 95% of them, are long-term tools. So whenever we talk to investors, it is 3, 5 years, 7 years plus. That is the horizon you have to think of. We even were talking about crypto, and everyone, so we announced today that we're going to do a Bitcoin ETF or an Ethereum ETF. Great, that sounds, you know, great in theory. Everyone goes, oh, so Bitcoin's gone up by X amount of percent, Ethereum's gone up by 400% year to date. But it is a very small allocation in a total portfolio. It is not your entire portfolio. You know, we do not, suffice to say, like you do not go, I'm going to go 100% in my Bitcoin or Ethereum. No. It is, diversification is key.
There, by the way.
I know, it's like, oh no, what do I do now? Let me go. Yeah.
This is not financial advice.
This is not financial advice.
Please do your own research as per what we said.
But the idea is to diversify, long-term investing. Don't look at your holdings from an ETF perspective. Don't look at your holdings day to day.
Don't.
Yeah, because there are some thematics, for example, very volatile on a day-to-day basis. In the long term, you may believe that they have a long-term trend of growth or whatever it may be. That's fine. But you look at it day to day and you will scare your pants off, and you'll go, I don't want to. I don't want to buy into that.
Alex, did you have anything else to add to
I
that
was
as well?
going to add on that. I mean, ETFs are just one type of investment, right? You know, cash is an investment, and it's important that you have all different types of investment because we don't know what's going to happen tomorrow, next year. You don't know if the value or the market's going to crash, if we're going to have another GFC. You don't know if we're going to have another bull run. And so with that, diversification isn't just important across your ETFs, it's also important across your life, like across your whole portfolio. And that means, you know, property, and that means cash, and that means defensive assets like bonds, whatever, your fixed interest, term deposits, whatever your particular, you know, whatever brings you joy in life to invest in.
I've never heard anyone say joy
Yeah,
about
joy,
bonds.
yeah.
Like, as someone who markets a bond fund, like, but I love
We're gonna
them.
make
but
them sexy
Yeah.
again.
I know, I tried really
ETFs
hard.
are sexy. You gotta make bonds
Bring
sexy
bonds
again.
back,
Yeah.
Oh my gosh.
So
I
yeah,
try
like
so
you know,
hard.
and that I think there's there's always going to be the hot stock, and it's currently crypto. But in the same way that you know you don't have one pair of shoes, have a nice spread. Again, not financial advice, but you know, it's kind of like drink water, people. It's like
Yeah.
that kind of
Yeah, you could spread it around. Get a lot of shoes. Make sure you
Get
know
a
what you're
lot
of
doing.
shoes.
Again, not financial advice. I'm going to leave it at that for right now. If you do have questions, we're going to at the very end, you can ask any of these four people. I just want to say thank you, and it was fantastic hearing from all of you. So thank you, everyone. Beautiful. 5-minute break. Feel free to grab some drinks, snacks, and we'll be back.
Cool.
it.
If you go back, then I go back? Now I'm like,
You guys will go
All right, we're gonna get started here.
stop touching the genitals. I'm too short.
Okay.
Do you want me to go back?
No.
on two by
It's
four?
more height. Like I can't actually reach the floor.
Yeah, I'm just like, because I'm waiting for the online stuff that's being recorded.
Not
so
tonight,
I'm
anyway.
like,
Just go and touch.
seeing
You are
if,
where you
if
are.
that's ready or yeah.
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 Sounded
Are we
very profound.
ready to?
Where you are.
Tonight.
Okay, it seems like we're ready. All right, we're gonna get started. I know, but it's not. Who can listen? Hello. Hello. Okay, we're gonna get started now. Oh yes, there we go. The microphone for the room. Cool. Maybe I'll give it 30 more seconds and we're going to kick it off with our second panel. Everyone got drinks and snacks, and people at home, hopefully you also have drinks and snacks. Awesome. Okay. So we've got our panelists for our second half. To my left, we've got Nick, who's one of the co-founders of Perler. And he's making sure that investing isn't gambling, making this world a better and wealthier place through Perler. Jimmy from Basic, who's passionate about fintech and works on the marketing team as a market insight analyst. So thanks for having you. We've got Sarah from The Money Mindset. She's a former lawyer and ex-workaholic who now advocates for strong financial literacy to help people achieve better and more enjoyable lives. Yes. And Tash from Tash Invests, who is a part-time OT student and on a mission to enjoy life while building wealth. So thank you, everyone. Great. So let's just get started here with a couple questions about technology and investing. So as things have evolved with ETFs and whatnot, technology has also enabled a lot of investing to become easier through this. So Jimmy, I'm going to throw the first question to you. How does Basic work, and how has that actually helped innovate in banking and technology?
Yeah, look, Basic is a financial technology company. We're based in Manly, and what we do is provide customer-consented access to financial data, which is a very roundabout way of saying if you want to build a brilliant app like Perler, you can allow your consumers to connect their bank accounts and their institutions to the application, and you don't need anything to do with paper-based documentation. You can do it in a couple of clicks and onboarding. And I think what Basic's kind of big forte is that we're here to support a number of fintechs in the Australian fintech landscape and also internationally as well. And I think Perler's alongside some of our other customers such as Afterpay and Zip, and we're really about kind of essentially not only being the building blocks of financial services, but also to kind of really nurture a community around our platform as well.
And around financial services, security is always a big issue. I know people always think about that. Do you have any comments on security, and how does Basic consider security within their product?
Yeah, look, security is front of mind, and our company wouldn't exist if security wasn't everything that we live and breathe. We've got investors on our kind of cap table that are NAB and Westpac, and if you're talking about bank grade security, you're talking about Basic as well. So security is always front of mind, and sharing credentials can be quite scary, but essentially what we've done is we've got a very solid technological kind of infrastructure to make sure that we never see those credentials, but also that the experience is great as well. So Basic does it in kind of two ways. We have a way called screen scraping, also known as digital data capture, and that allows people to share their credentials and log in with your bank and get access to products such as Perler. And the other way is with open banking, which is on the horizon, which will be a slightly different user experience, but overall it's very secure. And yeah, as I said, we wouldn't exist as a company if that wasn't front of mind.
So speaking of platforms and technology, Perler is obviously a platform that you can use for investing. What are some of the things that makes Perler different than other brokerage companies?
Okay, thanks, Anna. I was really listening to Jimmy, and I wanted to actually just say something quickly if I could before.
Please do.
No, I think you mentioned some really big companies there, and I think what's cool for people to try and start understanding Pearl is a young company, but technologies that exist allow young companies and big companies to tap into basically the same level of tech and security. Not everyone does it, but it's like if you're testing a new app or whatever, one of the questions you can ask them is how they are accessing your data, what permissions they've got, whether they sell your data, all those things I think we kind of gloss over as consumers, I know I do. And that's the sort of practical thing about what companies like Basic do. They basically put all that in a box and go, this is what we do, and all we do is keep it safe and make it easy so that, you know, whatever app you're using can like leverage that. I think that's really important for everyone to consider how it works for them, I guess. I forgot your question to me.
I was basically asking about Pearler as a platform and, and how that's slightly different than other platforms.
Yeah, okay. I mean, look, the reality is Pearler started its life as a very, very simple share investing tool. There are lots of share investing platforms out there. Let's just say there's big bank ones, there's super duper modern cool ones, and then there's Pearler. In a good way, but
Super cool.
yeah.
Pearler's up here.
Thank you.
Yeah.
Thank you. We sort of saw that maybe there was an opportunity to be a company that does something really basic, like help people buy shares, but have a philosophy behind it and actually stand for something. So what we stand for is, you know, automating, making things simple, cheap, hopefully, and you know, through that process, helping people maybe get better quicker and not make some of the mistakes that pretty much every investor makes, or make those mistakes smaller than pretty much every investor makes, I guess. Does that help? Yeah? What do you guys think? You use the platform.
Yeah,
What do you think?
I think from a user on the spot.
Yeah.
I think from a user perspective, investing is hard enough to learn. There's a lot of information out there. There's a lot of jargon. There's a lot of acronyms, and then there's more jargon to explain the jargon that you're trying to understand. Pearler, its simplicity is, from my point of view, one of its most attractive and redeeming features, because you can cut out, excuse my language, a lot of the crap or like the stuff that you don't need to know when you're first starting to invest, and actually just find what you're looking for and invest in it, as simple as that. And as you kind of learn those skills and you learn more as you go along, then you can worry about some of the other stuff. But I don't know, that's my experience using it anyway. So I think that's why we're saying it's not like the no frills version in the supermarket. It's the
It makes you not feel like you're missing out on stuff. I feel like a lot of the other platforms, you see all like the big gainers or the big losers, but with Pearler it's like, cool, these are your index funds, buy them, hold them, that's it. You don't feel like you're really missing out from it.
Thank you.
They
Didn't mean to make it into
that either.
Turned into a pitch, but I was going to actually ask a little bit more about different platforms. Tash, I know you use multiple different platforms that you've tried. What are the things that you consider when you look at platforms for investing?
I feel like we all put way too much energy into which broker do I use, which like Raise or Spaceship account do I use. So I think we really have to step back and be like, how much are we investing, how frequently are we investing, and what is the best strategy forward with that? So I think going back to being like, is a micro investing platform the best? Is a broker the best? And then just picking one that works for you. Like it really doesn't matter if you use Self-Wealth or Pearler or Superhero at the end of the day, as long as you pick one and kind of just go with it.
And with that as well, you just mentioned, I think, like how much do you invest, right?
Yeah.
Like that's a question that gets asked quite a bit. Like Sarah, do you have any thoughts on that? Like, do you get people who ask you that?
All the time I get, how much should you invest? And I feel like there's the technically correct answer, and then there's the more practical answer. And so I would say it depends where on your financial journey you are. And I'm assuming if people are here tonight, they're at more of the infancy stages. Either you've just starting or you're just about to get started. And so I would say how much you should be investing, not financial advice, is however much you can start with to consistently and regularly build a habit. Because making sure that investing becomes something that's regular and that you can part with is really important before you kind of focus on maybe what your longer term goals are. So do you want to retire early? Do you want to work part-time? Because there are plenty of compound interest calculators that you can go online if you want to, I want to retire by the time I'm 40, and you can plug that in and work out how much I should invest every month. But that's not particularly helpful, or I didn't find in my experience that was helpful when I was first in the infancy stages of investing. For me, it was what can I part with and still have a sustainable and enjoyable life and make this a regular habit. And once I formed that habit, then I started investing more regularly. And then once that was then a habit as well, then I actually looked at what are my longer term goals from this? Am I actually, do I need a 50% savings rate? Do I, is my aim maybe just wealth accumulation, in which point like you can spend more as you go along? So that's, I would look more so at where you're actually at on your journey and making things a regular habit.
And habit building is like such an integral part, especially in the beginning, right? Because that's part of what builds out your strategy. I know auto invest is a thing on Perler. Not to go back to the platform, but like that's part of strategy, right? Like, do you, Nick? Do you have any comments on how people can actually think about building out their own investing strategy?
Can I pass?
Look, I'll chuck you. I'll catch your football. I've said that. I don't know what I'm going to say now.
I think going back to like the how much do you invest, it's important not to focus on the one number that someone said, because a lot of numbers won't be realistic for everyone as well. So just asking how much should I invest? Is it 500 or 1,000? It's really what you guys can invest and what's sustainable as well, because a lot of this isn't sustainable when you start out and you're really excited and you're being super frugal. So it's like finding a sustainable amount that you can stick to.
I like to kind of liken it to the fitness kind of industry and analogies that you can't sustainably withhold a starvation diet and your finances are much the same. A lot of people put themselves into extreme scarcity or frugality, and it's just not sustainable, or they're not going to enjoy their life for the long term, and you're setting yourself up to create poor relationships with money, because then it's harder to spend intentionally on things that bring you joy. So, I mean, I still invest regularly, and I still do things like I live on my own, I regularly go horse riding, all the kinds of things that technically cost quite a bit of money, but they're things.
To hang out.
Yeah, fly to Melbourne to go see Tash because she called me and told me to. So yeah, I think just what you can part with while still actually enjoying life is more important than you should have a 50% savings rate, because I follow a bunch of people on Instagram and they have a 50% savings rate, so that sounds like a really good arbitrary number that I should pick.
Barefoot Investor said you should do 20%. Let's move on from that.
Yeah.
No hate to Scott Pape, but
Yeah, but it's like the amount of money you have to habitually invest kind of dictates pretty much everything else. It dictates what type of platform you should use, probably. And a big question we always get is, well, should I invest this month or every 2 months or every 3 months? I've got 500, I've got 1,000, or I've got 100. And it's that answer to that question that really, if you look at the terms and conditions and the costs of a broker versus a micro investor, you've really got to figure out, if I've got smaller amounts and I want to invest more frequently, maybe a micro investing platform is better for that. Even if it's not exactly what I want to do right now, it might just be the cheaper option to get you going. Generally, it just means that you've actually got the answer, and asking someone else is not going to give you what you're looking for. The terms and conditions and the fees will probably give you more of an idea, and you can ask pretty easy questions about that, right?
I think that goes into the habit building as well. Like, if you can only genuinely afford at the beginning, or to form the habit, $20 a week, then you might be looking at a micro investing platform as opposed to a brokerage. But if you can part with more money, then you can potentially go to a platform that allows you to do that.
Do you actually, just go to reflect on that, do you want to actually talk about the different type of ownerships as well? I know, Nick, that you
yeah.
something that's
Well, we'll touch on them really quick. I think when we talk about micro, people are talking about a sorry to use this term, a unitized trust. There's a company that sets up this.
Sorry.
Basically, it is one big pool of money, and it invests in other stuff, and you don't invest in that other stuff. You buy a unit in that trust. That is the easiest and cheapest way that you can get diversification for small amounts of money. When we're talking about micro, we're talking about a trust. It's quite safe, because generally these trusts are held by custodians, which are independent, and there's maybe layers of independence from the app, whatever it's called. You should check, but there's probably layers and layers of independence, right? So if the app stops, there's custodians, licensees, lawyers, and you'll get your money. That's important to note. And then
This is like the chess first custodian, if anyone's wondering.
we're not even
as
at the
well.
chess
Yeah.
and custodian
Sorry,
yet.
yes.
We're there. Yeah, we're getting
Yeah,
there.
okay, cool. Sorry, Wes.
I'm not sure.
Yeah.
There's like a whole plane going over my head now.
And then when it comes to chess, you know, I think there's all these terms that fly around. Anything that's held on the ASX is held on the chess register. Now, what you can do is you can have your own little bit on that register, and the broker, whoever that is, keeps a record between itself and the ASX, and the ASX is actually the master of all of that, right? So it's yours, and you can move that from one broker to another. No one can take that away from you. You just need to be able to prove you're you, so don't lose your ID. Then some brokers can collapse all of that and create their own little register, and that's what people generally term as custodial. A lot of effort goes into talking about this topic, to be honest, and you know, a lot of people have really strong opinions. There were some things that happened in corporate Australia 10, 15 years ago. Google custodial shares bankruptcy or something, and all these articles will come up from ages ago.
Some
And
light reading for a Thursday night.
and like to be honest, it's probably one of those things that has outlasted its, you know, problemness. But you can't really argue with the fact that if someone says they're your shares on your hidden, you really can't refute that. That is it. I don't think there's a huge difference, to be honest. Perla will probably look at versions of these things in the future. So, you know, as we learn more about them, I don't think there's a problem with any of them. You just need to understand, I think.
I'm going to throw a question over to Jimmy, jumping back to data and information. So we talked a little bit about micro, about chess and so forth. What is the benefit of potentially having all of this stuff in one place? I know, like with Basic, you can potentially see all of your different accounts in one place. And
Yeah, 100%. And like the kind of premise of not only what Basic does, but also the broader open banking regime is giving consumers control of their data. If you think about all the different, you know, smorgasbord of different platforms that have data in different forms, whether it be your social media, whether it be your finances, you know, the beauty of open banking is that initially it's going to allow you to centralize that information in one spot, specifically at the moment for financial institutions. And this is going to metamorphosize into a broader economy-wide consumer data right. And it allows for consumers to see all their information in one spot, if that is the use case they use. And also, like I use the term like data liquidity. It means that you can port that information from one institution to another. And it doesn't necessarily need to be financial institutions. It could be something else. And this is going to bring to life, like I get very passionate about CDR. I know it's a bit sad, but essentially this is going to bring to life so many new innovations that people can build upon and figure out how to use. Well, if a customer's consented to this data, how can I then use that in a different use case outside of, you know, maybe something like Perla? We can maybe use it for, then I might want to switch my energy account. There's a heap of different ways that data portability can come into play. And this is like a critical part of, we've seen it in the UK and the EU. Canada's currently doing it. Singapore's done it. A lot of countries are starting to say at a federal policy level, how can we allow for the portability of data to increase not only consumers' control and access to their data, but also bring to life innovations that can make the most of that in a consented and secure way. And, you know, again, going back to what Basic does is we're at the forefront of that. And it's so exciting to work with companies like Perla. We've got a great startup program. We've got a number of customers that are using us essentially to create these brilliant innovations. Because to be honest, like the days of going to a bank branch are kind of behind us. Well, I hope so anyway. So yeah, it's really exciting. Yeah, I get really G'd up.
I don't remember the last time I went to a bank branch, actually.
Yeah.
Oh.
I was actually doing a podcast the other day. FinTech Connect, check it out. It's by Basic. Shameless plug. Someone's got to do it. And I had the former CEO of Westpac on, and he said this question to me. He said, "When was the last time you used a coin?" Anyone used a coin recently?
When I went to
for the shopping trolley. That's the example I used.
In Melbourne, you need
when I went to Aldi yesterday.
Yeah, oh, really?
In a trolley.
Yeah, exactly. It's, everyone says trolley.
I have a fake one, like on my keychain that you can get.
Oh,
yeah.
Like,
okay.
put it on your keychain. You
Yeah.
don't need any coins. There you go. There you go.
Is that a hack?
I'm going to throw out a very last question that's going to go a little bit back to investing and strategy. I'd love to hear from you if you got a questions of what kind of strategy, what strategy should I choose for investing? What kind of feedback do you have for someone like that?
You want to take it away?
Yeah, there is no one strategy, and there's not going to be one strategy for everyone. So decide what your end goal is first, and then find a strategy that actually meets it. So I know a lot of us here would invest passively in index funds because it's easy. You don't have to stock pick as much. But yeah, there's no one answer at all for that.
I think like really working out what your why is. Like, why is it that you want to invest? Are you investing because you've heard that you should? And that, so you know that you should, but you don't really know why. So like maybe firstly you just work out why. Is it, do you want to beat out inflation? Do you want to build wealth? Do you want to retire early? Do you want to be work optional? And working out why you're investing helps you then form an investing strategy, what you're going to invest in, how you might want to diversify, how much you want to invest. I think it's also really important to know that that strategy, we should really kind of use the word strategy synonymously with plan. So investing strategy sometimes can sound a little bit overwhelming, like but like it's just a plan, and plans change, like, you know, going out for drinks on Saturday night, that might change. So your investing plan will no doubt change as you learn more, your financial literacy improves, and also as your life changes. So I know for me, like a huge part of my investing strategy or plan was originally FIRE, so to retire early. And I've been on an intentional kind of 6-month career break, and it turns out I really like the structure of working. So now I'm opting back into work, and my investing strategy is changing to actually just go to part-time work in a few years' time, which means I can actually invest less and save more. But spend more, not save more. But if I wasn't kind of constantly checking in on my own why, and I was reverting to just what other people were doing, why other people were investing, what other stocks people were investing in, my life would not be in alignment in the way that it can be with a proper plan for why you're investing.
And
So that was a bit of a
why
long
can
answer.
change too. I mean, I think people potentially get into trouble when they start out with a plan and they think, I'm going to invest for 5 years, and then 6 months later they turn around and reconsider and go, I'm going to pull my money out now. And generally that's when you hear of people, just wasting money, right? So the plan can change. What I tell my friends is get a really good idea of whether that plan is, I definitely don't need this money for 3 years or 5 years or whatever it is, and whatever you're saving for can change. It doesn't really matter actually, because if you're investing in simple things and you're not going to get stressed out by it, that's great. But as long as you don't have this, maybe it's even personality that means you're going to change your mind really quickly. If you know that's you, then that's okay too. Maybe just take it a bit slower, I think. Yeah.
That is me, but we can have a huge buffer fund. That's my life.
Buffer funds and whys are some key takeaways. Thank you, everyone, for being on this panel. We're going to take just a quick break to switch over mics, and then we'll have our 4 investors back on the panel. So, thank you. we're ready to kick off.
A strong gust of wind and you threw your door
yeah.
around.
You have to turn this mic on if you want me to get people's attention.
It's the aircon, I swear.
Yeah, okay. Can people hear me? All right, we're going to get started. Hello. All right. No one can hear me. It's okay. Can they? All right. Oh. Hello, everyone. All right, we're gonna kick off the third and final panel. So if you have any questions, get them ready. We're gonna take them from the audience. But before we do, we're going to take some from online because we've got online viewers as well. So one of the first questions is for all four of you. How do you stay motivated while getting rich slow? And this is from Annika, aka Fire Girl Invests, and congrats on the event, she said. So who would like to take that?
I will. Crickets. I think it leads into what I was talking about just before we last took a break, which was about creating a lifestyle that is sustainable while you're investing, because it's a lot easier to stay motivated and to regularly and habitually invest if you're still doing the things in your life that you enjoy and you don't actually feel like you're depriving yourself from enjoying those things.
Automate everything as well. Like, don't rely on motivation. Like, automate your investments, automate your transfers, automate everything, and then it's not a choice every day. It just happens naturally.
I guess I would also say that, like, I think a lot of people think that, like, you have to be, like, super frugal and, like, you know, just live on, like, baked beans and, like, bread and, like, live a really sad life to, like, you know, it's just not appealing, you know. Or you have to, like, you know, spend like lavishly and like have no money left at the end of the day. It's like, it's all about balance, you know, at the end of the day. And I think also, like, I've been through stages where it's all stages in life. Like, I've been through stages where I've been so frugal, maybe too frugal, some stages where I'm just like too lavish, and it's just finding that balance where you're just like happy and you're comfortable and you're building that life that you want, you know. And at the end of the day, like, life, like, we're gonna live for such a long time. Like, really, like, you know, I did, hopefully, fingers crossed, but like, I did this life expectancy test and it was like, I'm hoping.
What was your life expectancy?
I mean, it was not scientific at all, but like, I mean, it was like, you will live to 103, and I'm like, I hope so, but I'm just like, man,
with Queenie
like, I hope so. And I'm just like, man, like, it's not a race, you know, like, you just gotta enjoy your life, like, while we're here. Like, it's so amazing that we're even alive. Like, the chances of being born is like 1 in like a gazillion, you know. It's just like, we're so incredibly lucky to be alive. Like, we should really make the most of it, but then also leave room for saving and investing along the way.
I think knowing as well that the beginning part is the hardest time to actually stay motivated. I feel like the longer that you're investing, as your investments start compounding or you start receiving dividends, even if they're small, those are little things that can actually kickstart and give you motivation along the way. But it takes time to get to that point. So kind of knowing in the beginning, and that's part of why you need to kind of build that habit, even if it means, you know, it's only a small amount of money regularly, that down the line it's easier to stay motivated because you're automated, you've got your habits set up, and you're actually seeing your money grow.
Alex, do you
I couldn't have said it better.
Oh, thanks. Thank you.
There you go. Perfect. I would love to live to 103. That would be
Yeah,
the
that's
things I
impressive.
would do in this life,
Low
right?
carb retirement.
We'll see you
It's
all here
real
in 80
slow.
years. You know?
Get rich really, really slow.
We did it. Perfect. I'm going to take another question from our online audience. So, how has your investing strategy changed since getting started? Has your behavior towards investing changed? And this is Maddie from Money with Maddie. P.U.S. Wish I could be there. And so proud of you.
Maddie!
Shout outs to everyone.
Yeah. I'll take that one because I think when I first started, it was like the dipping your toe into the water and being terrified of the water, but knowing that I should try it. I should go in there. And over time, you know, when you first start, you know, I did race and I did ComSec, and it was a lot of dabbling. That's the best way I can describe it, dabbling. But I don't regret that, you know, and this is maybe for those of you that maybe the whole room has already started investing, in which case, woot, amazing. But if you're still like on the fence, my reflection on that part of my journey was, I'm so glad I started. I don't invest the way I did then, but I don't care because I started, the habit was formed, and honestly, the capital gains were created. So it didn't. Yeah, exactly.
But the afterpay gains.
The afterpay gains. Yeah. So it didn't matter that my strategy wasn't perfect, because it's still not perfect and it will evolve. But all I can say is that I'm so grateful to the me that made mistakes and even dabbled and allowed myself to dabble and not be like, oh, I have to pick the right thing. And you know, the investor in me now, like, it's all automated. I'm quite boring. I only add ETFs when I can bear the administrative burden at tax time. Like, that's genuinely my criteria now, is like, oh, the divot, like the whole thing. So I try to keep it really neat and tidy, and I just try not to think about it as much. Obviously, I'm still in this space, so I still enjoy researching about new emerging trends, and I still enjoy the research part of it, which if you don't, then set and forget might be the thing for you. But all I can say is I'm so thankful to 2017 Alex for starting. Yeah.
Here.
So true. I love that. Yeah. I've never met anybody that says like, damn, I should have started investing 5 years later or like 10 years later. Damn, you know, everybody wishes that they started investing earlier. You know, there's no better time to start than now.
I kind of like to think of it as well as like analogously to when you're in school or in a professional environment, and you're new to that place, there is only so much information that you can absorb by being told until you actually have to learn by doing. And I'm going to steal from Tony Robbins. Information isn't power. Information and action is power. So, you know, you can come to a bunch of events like this, you can read a bunch of stuff online, but if you don't actually do anything with that information, you're not actually any further ahead, at least for your money, than if you just start. And it's fine if your financial strategy or your investment strategy changes going forward, you actually just need to take that action to start.
And it gets easier, so much easier. When I first started, I was so frugal and I counted every dollar and I researched every platform under the sun and I read everything, and it was just so overwhelming. And now it all just works, and it does get easier and it does get better as well.
It's funny with investing, it's like the one thing that I often hear, like people are like, I haven't done enough research, I need to do the thing, but that's not the case with anything else, right? Like if you pick up a sport, you're not going to be perfect. You need to like practice.
You don't become a mechanic to learn how to drive.
Yes.
Yeah.
Exactly. And
I like that.
Sorry. Exactly. But investing's no different, right? You have to just kind of keep doing it, and you're just going to get better at it. It's a craft that you're learning, and you're going to create your own strategy and create your own goals as you go along that way. So, I think what you all said makes absolute sense. So, do we have any questions from the audience? Anything we'd like to ask? We've got one over there.
Hello, my name's Ben. There's been a lot of talk about forming habits and getting into a routine and a rhythm around investing. What are some sort of practical daily, weekly, monthly habits that you all employ in order to make that part of your routine?
For me, like my biggest one when I first started, and it wasn't actually with Perla because I didn't know that Perla existed, was finding a platform that I could automate investing. I wanted it to be treated like a direct debit and that the money was actually taken out of my account so I couldn't spend it, because Sarah back then did not trust herself not to spend the money. Like I would have, gone to the pub on a Friday night and probably shouted all my mates a drink. Like, so for me, automation. Drunk Sarah's very generous. Can all thank me later. Automation for me was a huge one. I just wanted the money out of my account, and that for me was the easiest way to form the habit. I do it a bit more manually now, but automation was the biggest one for me.
Yeah, definitely automating for me as well. Like I'm probably the worst with like sticking to a routine or like keeping the same thing going. So automating it so you don't have to think about it at all is definitely good.
I think also seeing it as a line item in your budget. I don't know about you guys, but I've seen so many articles like how to budget, and it's like 30, 30, 30. And I'm like, but where's the investment column? And some people say that's sort of bundled in with savings, but I don't see it that way. My savings are liquid. Like that's the money I can touch tomorrow to pay for something. And that's in my bank account. Again, not financial advice. But yeah, I started treating it like a bill. I have to pay rent, I have to pay my utility bill, and I have to put aside money for investing. But as Sarah said, when I started, honest to God, it was $15 a fortnight with, at the time, Acorns. And now it's a lot more, but I still treated it. It was a direct debit, it came out, I didn't think about it, but it was that habit forming. And you know, the habit setting, I loved what you said earlier about making it proportional. I love that too. I love everything you say. But you know, make it a proportional habit. No one. Oh, I'm really spooking you tonight. You don't go out and run 30 kilometers, right? You do that later. You start by going on a walk. But we expect with investing that we're going to be a day trader tomorrow, and we wait until we feel like we're a day trader until we start. So make the habit proportional, you know, make it whatever you can afford. And I find that makes it so much easier to stick to. At least that was exactly how it felt for me. Once I made it realistic, it was a breeze.
Makes it more achievable as well, right?
Yeah.
Yeah. So true. I think looking at what I'm spending money on, like that's a big one, because like I think it can be really easy to just spend money and you don't even think about it, you know, like I think we're living in this culture where it's just so easy to spend money. Like you just tap your card, you don't even have to like get out your wallet, and like you just use your phone. Like it's wild, you know. It's just like the technology is evolving so quickly, you know. It's so easy to spend money, and I think actually like having a look at what you're spending money on and like seeing that, it's a bit of a shock. Like it really, like the first few months I was like, whoa, this is not this is not the kind of budget that I thought I would have. But then you learn from that, you know, then you can grow, then you can start spending more intentionally. And I think that where you spend money, that's actually kind of the person that you start to become. Like if you, for example, I didn't really spend a lot of money on my health and my fitness. Now I spend money on an expensive gym membership, but it's very intentional because I go 5 days a week, I go all the time, I love it. It's just like, it's so worth it to me, and I'm so happy that I'm that person that spends money on my gym membership. And you know, if I never checked my budget, I would just be spending money on like, yeah, shouting everyone at the pub, like a round of drinks. That would just be me. Like,
Can I steal a quote now from Joe Biden?
Get to your content, Sarah.
Come on, I'm just giving people credit, okay? Everybody steal. I'm going to paraphrase it now, but it's if you want to know what your values are, look at what your budget is. And I think that's exactly what you were saying. And it's kind of the easiest way to kind of make a plan and a strategy and continue going forward is to actually look at what you're spending on. Is that something that you value or not? If it's not, cut it out. Put that money towards investing. If it is, then keep spending.
That quote got a lot of audience.
Everyone's like, oh.
Was it eye rolls or like?
No, like that's deep. And
Thank you, Joe.
You could have just pulled that as your own. I don't think anyone would have known that was Biden, right? Like.
Yeah, but it's more impactful because we all know it's from the
fair enough.
the president.
Any other questions from the audience? Hands up. Yep. Do you want to right here?
Don't worry, I'm not going to ask you what you guys invest in, but I'll probably will throw in a question that's not directly investing, but I think kind of impacts how much people can afford to invest and ultimately their end goals. So around kind of increasing your either income in your career or creating additional streams like a side hustle, what's kind of your take on it and kind of advice for the audience here?
I'll start. I'm sure you guys have views. So I have doubled my income in 3 years. Putting aside like side hustle, I just want to talk about my career. Yeah. And I want to talk about, I actually think that's such a brilliant question because I love the hustle culture. I think, you know, we're beating house prices, people. We gotta hustle. But I also consider time and effort, right? And for those of you that work full time or have a set job, you're spending those 37.5 hours a week at that place, right? You don't get a choice, but you do get a choice in whether you accept 50,000 or 60,000, 75 or 85. And that's money you get for the 37.5 hours you spend at work, whether it's January or June. And I think there's so much to be said about creating more of a conversation about how you increase that income. So I won't hold out on you. The first thing is become as valuable as possible, right? First thing, you guys have a huge edge on, I'm sorry, the boomers. You know how to use Microsoft Teams, and you know how to take yourself off mute, right? So turn that into value. Whatever it is at your job that you do that nobody else does, make that your niche, make it your brand, and be the brand. The brand can be millennial tech expert, right? But suddenly you have that currency you can trade on. And when you go into those conversations, I'm sure all of you have more to talk about than I know how to take myself off mute. But it's those kinds of I'm with you. I also don't know how to do it sometimes. But push for those increases. That's my general advice, because there's so much to be said for having 10% more of 100 grand to invest than when you're working part-time. So move laterally. Don't accept jobs you hate. FIRE is amazing and I love the concept, but it does ingrain in us this idea that you should be unhappy. Doesn't matter for 10 years, for 45 years, it actually doesn't matter. Go and find the jobs and the workplaces and the salaries that you feel value you, and build the credentials, the personal brand, the networks that will get you that money, because then you have 10% of a new 30% greater wage is a huge increase to that line item in your budget.
Yeah.
It's me done.
I mean, that was said incredibly well.
Yeah, that was really good.
I just want
Microsoft.
I think there's only, to your point about side hustles and where that comes in, I 100% agree with Alex. The easiest way to increase how much money you make is through your 9 to 5. Where that's not possible, there is only so much that you can cut back in a budget. You're going to get to baseline level point where you need housing, you need food, etc. So if you want to then be growing your income, that is where things like side hustles come in. And I don't particularly love hustle culture. I don't know if I'm now disagreeing with you, but
I agree. There's like some terrible.
But
I
think your life can be seasonal, right? And you don't, just because you pick up some side hustles now doesn't mean that you have to do it in 2 or 3 years' time. It can be for a finite period. You can kind of say, well, I want that house in Sydney, and boomers be damned because they're so expensive. Yeah. So for 2 or 3 years, I'm gonna, take up driving in the gig economy. I'm gonna sell stuff on Etsy. There's a myriad of different things that you can do
Be
for.
a content creator like Max as well. Max has an Instagram. Everyone should go follow him.
Yeah. Yeah, I think.
I didn't pay her at all.
I think, just to kind of summarize, side hustles can be extremely helpful to increase your income outside of a 9 to 5, but there is also something to be said for not burning yourself out. And as someone that is 6 months into an intentional career break from extreme burnout, working 60 to 80 hours a week, working side hustles, doing all of the things, there's only so long that those things can be sustainable. So if you want to, go get that coin, just make sure that you have some kind of end period in mind, because those kinds of things have to be seasonal, but they are a great way to make additional money.
Yeah, and learn new stuff as well. I think for all of us, we didn't expect our Instagrams to end up being what this is. So you can learn so much from them as well if you kind of find ones that are meaningful and you really enjoy as well.
Yeah, I just wanted to say something, but I did the maths before I came here, because I was kind of thinking that maybe this would come up, but so I have this false eyelashes e-commerce store that I started a while ago. It was ages ago, maybe years and years ago. It's not doing very well, to be honest. It's not. I have not worked on it
Hit
in
us up
years.
with a referral code.
I should. I'm not wearing them right now, but
$5 off.
Yeah, I should. Yeah, but it still generates $200 a month in passive income, because I literally don't do anything. And I was like, I wonder how much I would need to invest to get $200 a month in passive income. It's a lot. So 3% dividend yield, it would be 60 grand. 4% dividend yield, it's just 60 to 80 grand I would need to have invested to have $200 in passive income. So it's just like, I don't know, like even if you start something, it doesn't work out. I do not sell, like I don't make it a habit of like working on my false eyelashes e-commerce store, but that's $200 a month. It's like just, you know, from doing literally nothing. And like, obviously, like with our Instagram pages, like I was able to quit my job and like do this full time, and like, I never thought that was, like I'm literally just like, not even that special. Like I cannot even like no, but seriously, like not even like, and I just think that there's just so much possibility out there. Like you guys are smart, like you're obviously driven, you guys are here now. So it's like you can make something, you know, and I just, yeah, even if it doesn't work the first time, I've started multiple things that didn't work, like there'll be something that sticks, you know. I think it's just worth it to give it a go, right?
I think you touch on a really good point though, that we often think of side hustles, including myself when I was answering your question, as active forms of work to create income, but you can actually make passive income from side hustles, you know, whether that's creating some kind of digital ebook in a weird niche that you have, like turning mute the mute button on and off, and like, you know, creating an ebook and then just selling it, and once, you know, your content is done up front, then it's just passive basically after that. But there's a lot of different ways that you can make additional income, and then not all active.
That was a great question. I think we have another question from the audience, and then maybe online.
Hi ladies, big fan. Follow you all on the gram.
Ladies Finance Club!
I was wanting to know, what investment theme are you most excited about?
Does someone say spicy? I completely agree. Okay, all right. I will be a bit spicy. We're all friends here. Wait, quick show of hands. Who's invested? I'm putting aside your superannuation. Who's invested? All right, so we've got a bit of a mix. Oh, everyone. Okay. All right, so we can talk then. We can talk then. We can talk then, right? Because we're all like level of sophistication. Great. I'm really excited, not about cryptocurrency. I don't really care. What I am really excited about actually is the technology. And I think there's a really important differentiation to make between squid coins and whatever Elon Musk's tweeting about, and what the technology can do. Because in the same way that everyone, like there was a tech bubble and there was a huge drop, we still use computers today. So I think the technology aspect, DeFi, blockchain generally, just this idea of decentralized, authenticated, you know, you don't need a bank or a PayPal or a Visa sitting in between platforms. You don't need an Airbnb to be the conduit between you booking a house. A platform can do that, technology can do it. So I think it's interesting. What I think is unfortunate is that, like tulips back in Holland and like tech in the 90s, we love the new thing. And I think the same thing of cryptocurrency. Everyone's pouring into it because it's new and flashy. But what I think will be really interesting is what's around 10 years from now. Is Combank gone and we're all using blockchain or Ethereum's like platform in order to exchange money? Or what I perhaps think, this is just my speculation, that those companies will still exist and they'll just integrate the technology into their platform. So that's what's really interesting to me, is like, what's it going to look like in 10 years? Are we still going to be buying ETH on coins, whatever? Or is it more likely that, you know, in the background, your bank will be doing an exchange or transfer of money with another bank using this currency? Who knows?
Yeah, I think cryptocurrency is just like, we're just scratching the surface of all the use cases. I also like, in a similar way, I think EVs, I mean, I test drove like a Tesla the other day. It was like, it was really cool, but it's just so different to like everything else out there in the market. Like, had a look at a Toyota Corolla, which is amazing. Like the spec'd out ones are like awesome with technology, but like Teslas is just like pretty wild, like all the things that you can do with it. And I really also think we're just scratching the surface of like EVs. Like there are so many like car manufacturers that are coming out with their own EV vehicles as well, and I just think, yeah, it's such a cool space, and like, man, just crazy.
It's a good thing we're living to 102 or 100.
I know, right? Don't quote me on it. I'm sorry.
Don't quote you on a living to 102.
I mean, your results may vary.
Past age, not indicative of future age. Like what?
We have a question from online.
Thank you. This will be our final question of the night, and this one comes from Kevin Mitnick. And the question is for the entire panel. What has surprised you the most in your long-term investment journey? Tash, do you want to start with you?
Oh my gosh, I don't know what's surprising. Just how easy it ended up being, I guess. Yeah. Initially, I thought you had to concentrate heaps and do lots of research and do lots of work, but once you've set it up and it's automated, it's actually ended up being quite easy. I never expected that.
I think mine would actually be how much I enjoy it. When I first started learning about investing, I'm terrible at maths. I'm really bad with numbers. Don't ask me to add 1 + 1. Not actually that bad. But so I thought that when I first started investing, just be a bunch of boring dry shit that I wouldn't really like. And I just knew that I needed to do it. I knew that if I wanted to accumulate more wealth, it was something that I just needed to learn about. But as I started kind of doing it and seeing things I was investing in growing in value and getting dividends, how much that I actually just really enjoyed it. And it wasn't these kind of boring bro things online. It was something that I actually just really enjoyed doing. So that was probably the most surprising thing for me.
I really enjoy it, and I've really enjoyed watching it evolve. If you sign up to kind of all the funds have newsletters and CommSec has a newsletter. It's really interesting watching the tenor, the way that how we talk about what's new and what's exciting has changed. Everyone's talking about EVs and lithium and crypto and all these kinds of new things. But I have really enjoyed that, you have your portfolio and then all these kind of things are happening in the background, and you might choose to agree that one of those thematic trends is going to be prevalent or it's going to be the big thing and buy into that. But I have just really enjoyed, my portfolio has somewhat stayed the same, and there's kind of been satellite or kind of tiny things that have been orbiting as I've gotten more.
Pun intended.
Pardon?
Pun intended. Sorry.
Satellite?
You said orbiting.
And orbiting.
And then sorry. Dad joke.
Unintended.
Dad joke
Actually,
over here.
super intended. It's all scripted. Yeah. Just
Sorry.
over time. Yeah.
I caught it.
Yeah, that was clever. I think how much easier it gets after the first 100K. That's just wild to me, because I feel I was just living such a sad life at the beginning, thinking I would never be able to afford
how could you allow
an
this to happen
apartment.
to her?
Oh, it was a bit sad for a while. It really was. It really was. It was sad, But now I'm just I feel a lot more free, and even though I'm still frugal, I feel I don't have to worry so much about money, and I think it's just going to get easier over time. So it's just the first 100K is so crap, and you've got to go through it, and then it just gets so much easier. So if you feel it's taking forever and it's just never going to happen, it's okay, because I felt like that as well. So it
feels like
okay.
crawling for months, and then overnight you learn how to sprint.
Yes.
8 years.
It takes so long.
Yeah.
Yeah.
We do have room for one more question.
Oh.
Yeah, okay. We don't want to end on 8 years of crawl.
Let's make a lighter note.
Oh, bring it back up.
Okay, I promise this is kind of themed as we go into networking, but hi everyone, I'm Cindy, and I guess, thank you. I think my question is around how do we start conversations with people around personal finance? Maybe not people that are typically in our finance circles, but people who are at work or outside of those circles. I think traditionally there's such a big gap in financial literacy between men and women, and I think a big part of that is seeing finance bros online as the only people, out there. So I love the diversity and the fact that we have an all-woman panel right now. So, yeah, I guess
and a very, very, very diverse audience as well. Very diverse audience.
Yes,
awesome.
love that. But yeah, that's my question. I guess, how do you guys start these conversations, and maybe what are some ways you can get around those challenges that do come up?
I think for me, at least personally, it's kind of the same way that I would start any tough conversation, which would start by me being vulnerable first. So me sharing something, whether if you want to start at a real baseline, actually I don't want to go for, drinks tonight. I'm saving for X, Y, Z. Why don't we go for a walk or coffee or something? And then kind of naturally progress the conversation, like depending on your level of relationship, or just kind of asking open-ended questions like, oh, like what are your kind of financial goals? Like what do you kind of see for yourself in the future? But yeah, I would generally start with myself, because I feel like once you share with someone, you put them in a safe space to share back with you.
Yeah, and then you normalise it as well. I think the same. Like I started talking about my own finances first, and then people would open up to me and come to me to ask questions as well. So just starting that yourself, definitely. Also, Cindy has an Instagram as well. Everyone should go follow. all these amazing people.
I agree, and I think we celebrate people having a baby, we celebrate people buying a house, but we don't have a 100K net worth reveal party. And maybe we don't want to go that far. What's your asset class? But exactly. I just think have those conversations. I actually think there's so much stigma around money and around debt as well. Maybe we're getting a little bit more comfortable talking about investments because you've got an app and everyone's sitting on the bus buying or looking at their portfolio. But we don't talk about debt as much. And that's actually how I started talking to my friends about debt. My car loan, my credit card debt was awkward, it was uncomfortable, but it was amazing who then said, I'm also in credit card debt, or I also have a car loan that I'm upside down on, or it's overwhelming me. But equally, salary conversations at work. For those of you that don't have, lawyer in me, confidentiality clauses in your agreements about talk about it. The only person that benefits from not knowing what two doing the same job colleagues are earning is your employer. So have those conversations, and you'd be surprised by how people will open up. And then it becomes just normal. Yeah, what did you have for coffee? Oh, what shares are you watching? And that's honestly, I am staggered by the amount of friends now that are like, oh, I'm really excited. I'm gonna I have my next parcel and I'm gonna invest in blah. And it's just part of the conversation now. And money and I now treat my friends paying off their car loans as if they got a promotion at work. I'm going to get them a cupcake. It's going to be a big deal.
Oh, that's awesome. I think, there's so much taboo around money, and it makes me so happy when my friends tell me that they've one of my friends told me she saved 30K and she never thought that she would be able to save that much. And another friend's looking to buy an apartment, and I'm just you can connect with your friends on such a deeper level, when you know what they're looking for, what they're striving for, and it's just I wish I did it sooner. I felt awkward, they're gonna judge me for wanting to save money, wanting to build wealth, but no way, we're all kind of thinking it, it's just everybody poops, right? Everyone's thinking about money. We all think about money, everything, there is nothing wrong with it, we should totally normalize it, and it's just amazing to be able to connect with your friends about that stuff.
I think there is a degree of uncomfortableness before it becomes kind of normalized though, and it can be something as simple as I, just listened to this podcast, or I went to this event tonight, and it was really interesting. Do you invest? What do you think about investing? It can just be very baseline level conversations before, you go up to one of your friends and say, yo, what do you earn? As much as we should be able to have those kind of open conversations, not everyone is comfortable talking about it, because it can be such a taboo and loaded conversations, and there's a lot of, the way that people are raised and their own limiting beliefs around money, those harder topics around how much exactly you earn, how much debt exactly you have, those can be things that take a long time for people to feel comfortable sharing with you. But you can start talking more just generally about money, what they know about investing, what their general savings goals are, what they like spending money on.
Have conversations, talk to your friends. Let's not make this taboo.
Yeah.
Fantastic. We're gonna call it a wrap. That's it. Thank you to all of you, and also to our sponsors who came out tonight: Invest, ETF, Securities, Basic, and Perler. And thank you, Tash, Sarah, Queenie, and Alex for being here, and thank you for all of you to all of you for talking about money tonight. So thank you.
Thank you, Anna.
And thank you, Anna.
Awesome. If you're looking for a Perler investment credit, if you haven't already, please email Thomas at perler.com and go off and talk about money. And thank you to everyone who's watching at home. We'll see you next time. Get rich slow.
I love that.
Awesome. Cool. Thank you.